I made $12,000 in a single day with day trading at 19 years old, and in this video I'm going to give you a step-by-step breakdown on exactly how I did it and the exact setup that I took. So let's get right into the analysis. So first off, I actually took this trade I think a week ago. I didn't have a chance of recording it, but here are the screenshots of the P&L. I made about 10K on one single trade, and I made a few other scalps that made me about 2K, so it adds up to around 12K. But yeah, the main symbol I traded was the stock called OTLK. Now, if you guys are new to the channel, welcome, and you guys need to know that I trade gapping stocks. These are stocks that moved in price overnight. So these are basically stocks that gapped in price overnight due to news or due to some sort of event, but price moves overnight sometimes in stocks, and I trade the ones that moved in price because it creates momentum into the stock. It makes the stock move throughout the day, and it gives me a mental bias on the direction I want to play the stock in. So I was scanning through my watch list before the market opened, and I noticed the stock OTLK was gapping down. So I'm right now looking at the daily chart. Each candlestick represents 1 day of time, and you can see this right here is the daily chart, and price is kind of consolidating, moving sideways for literally since October all the way to November. Literally 1 year of kind of sideways action, kind of moved down here, but overall it's consolidating. Now I noticed that the stock was actually gapping down in price overnight, and it was gapping down to about 87 cents. It was trading around in this range from $10 all the way to $4.84, and it ended up gapping down in price and opening at 87 cents. So this is what we call a mega gap, something that gaps a very large amount in price overnight. So now that I found this gap, I want to make sure that it is clearing levels of support and resistance, because you got to remember, whenever people are invested in a stock, or they're shorting, or they're in something long, swing trading, they usually have their stop losses at a level of support or resistance. So when I look at the symbol, I notice it's gapping well below this line of support. So you got to think about it like this. Everyone who was in this position as a long woke up in the morning to see that their position is now underwater and it's down a lot. And this creates shock value. People who are in the stock overnight woke up and they were shocked. Now that emotion of shock will end up translating into momentum in the stock in many different ways depending on the gap. So whenever a gap it moves down this much in price overnight, it can actually result in two different moves. It can actually continue lower if the buyers end up selling all their shares because they're fearful it's going to continue moving lower, so we could have played this as a short, or we can expect the gap to get filled and move back up to the price range because either A, the people who are already invested or in this position as a long want to make back their loss, so they end up buying more hoping it would move up, or people look at this opportunity and see that the stock is extremely undervalued and they end up buying it at these extremely cheap prices. Now, based off this analysis, I could play the stock either way depending on the setup that I saw. So in the morning, I usually look at the 1 minute chart and the 2 minute chart, usually the first 30 minutes of the day. And as the day progresses, I shift my focus more to the 5 and the 15 minute chart. I'm always looking at all 4 time frames, but my main focus on finding the setups will always be on the 1 and 2 minute chart very early off the market open. So if you guys look right here, this first chart right here is the 1 minute, the 2 minute, the 5 minute, and the 15 minute chart. So as soon as the market opened, if we take a look at the 5 minute chart, we could see that the price was just consolidating on all time frames, right? If we look at the 5 minute chart, price was kind of moving sideways. So based off of this is called a base setup. It could either be called a base breakout or a base breakdown. This is basically when you enter a position once it breaks the consolidation. So remember, whenever something moves sideways, that means that whenever it hits a certain price, it gets sold, and whenever it hits a certain low, it gets bought. So if we look at this stock right here, every time it kind of got close to this line right here, it kind of bounced off of it, it stayed below it, but every time it touched this price right here, it kind of bounced up. So they're kind of created a minor level of support and resistance. So if this stock ended up moving down and breaking this level of support, we can expect that the sellers won the battle, because remember, at levels of support, it bounces because buyers step up to the plate and they buy the stock. At levels of resistance, sellers step to the plate and they short the stock, or they sell the stock at that price. So we can expect levels of resistance to have lots of sellers, levels of support to have lots of buyers. So whenever we see price break one of these levels, it tells us that either the buyers or sellers won the battle. So at this point right here, I was just watching the symbol to see if it's going to break support or resistance. Now, it ended up breaking a level of resistance right here at about $1. It broke this level of resistance, this imaginary line that I just created. That tells me that in the past, pattern recognition, in the past, as this thing was, moving for the past few minutes, the sellers were always strong up here. The sellers would come. But now, once this thing broke the level of resistance, this indicates to me that now that level of resistance, buyers have actually stepped up to the plate and defeated that battle of those sellers. They have broke through that wall of sellers, and that indicates that the buyers have won the battle and that this stock is going to move higher. So this gave me a pretty good entry to play this position as a long, and I believe that the gap is going to get filled. So what I did was I had my entry above the base. This is called the base breakout pattern. I had my entry above the resistance at around $1.01, and I had my stop originally at 87 cents, but then I actually raised it because I saw there was kind of another minor support level right here. So I ended up using 91 cents as the stop. So I risk about $400 a trade. I got into this position, and if you guys haven't already, go watch my risk management videos, because that's how I show you how to calculate share size. But basically, my entry was at $1.01. My stop loss was at 91 cents, which means the difference between my entry price and my stop loss price is 10 cents. Now, if you guys remember, my calculation formula for finding how many shares I should get is my dollar risk, how much I risk per trade, divided by the size of the stop loss, which in this case is 10 cents, equals how many shares I should get. So if you do the math on the calculator, I risk $400 a trade divided by 10 cents, and the math is 400 divided by 10 cents is 4,000 shares. So I got in with about 4,000 shares at $1.01 as a base breakout pattern. Now, when it comes to these gaps, I can expect them to move a lot in price. And because my stop was so tight, I was expecting a very large reward to risk. I was very confident that this thing had a lot to move higher. So I got in, it triggered me in, and it instantly started going. Now, this right here, I ended up not taking profits here. It moved up about from $1.01 all the way to $1.40. So I was already up 4 hours. I was already up $1,600 at this point right here. Now, I was so confident based off of the quality of the gap, the amount that it moved down in price, that this thing had a lot more to go. So I ended up not taking profits. And at around this point right here, it was forming a buy setup. And if we look at the 2-minute chart for more clarity, it was forming a buy setup. It was bouncing into that 20-day period moving average. Because remember, whenever we see price touch that 20-day period moving average, we can expect a bounce whenever it is moving up at around 45 degrees. So I saw there was another opportunity. I ended up raising my stop loss to below this pivot point. I raised my stop to around $1.14 once I saw it trigger this breakout, this buy setup pattern. Once I saw price break at around 10:32 a.m., at $1.25. I ended up raising my stop loss. So if it stopped me out, I would be up in the money. But something I did here, which was pretty aggressive of me, I actually added to the position because there was another entry and I was so confident and I had conviction. So it had a buy setup on all time frames. It looked very good. The gap was amazing. There was time frame alignment on the 1, 2, and the 5-minute chart. And I ended up adding some more shares at around $1.25 right over here. If you don't already, go make sure to watch my setup video, the buy setup. This will make a lot more sense. But I ended up adding another, I think, 4,000 shares or 5,000 shares here and making that stop loss my new stop. And this thing just continued to rally much higher. So I ended up hopping in with, I think, 8,000 shares. I added a little bit more on this 2-minute and 1-minute, like 1, 2, 3, 4 pattern. So at one point I had like 10,000 shares long. My stop loss was moving up and this thing just flew higher. It was just going in my direction. And at that point, I did the 5-minute bar by bar management, which means every time the candlestick moves below the previous candlestick's low, I would trail some of my positions. So I was just watching it 5-minute bar by bar. Notice how at this point right here, it never actually trailed me out. The bottom of this candlestick moved higher, this one moved higher. Now right here, the low of this candlestick ended up moving below this previous 5-minute bar's low. It touched below this previous 5-minute bar low. And I ended up taking a little bit of profit right over here. Then I took some of my profit and decided to do the back of my position 15-minute bar by bar. So I took a third of my position at around $1.70 and I decided at this point I was going to trail the back of my position 15-minute bar by bar. So I would raise my stop to the 15-minute bar's low every time a new 15-minute bar candlestick finished forming. But it ended up rallying more, ended up rallying all the way to $2.20, which is about $1.10 away from my entry. And then sometimes I added to it on the way up on these little mini 2-minute base breakout setups, like around 161. I had another base breakout at around 180. I had a little buy setup, so I kept adding. This thing ended up rallying higher. I kept raising my stop, and at a certain point I was up a lot, and I decided to start using a very tight management. Once I was up at around 8 or 9K, this was the first time in a while where I was actually feeling very emotional during a trade. I could tell I wasn't calm. I was definitely caring a lot, and I was getting a little nervous. My hands were sweating. So I started raising my stop pretty tightly, and I just started taking profits. And at a certain point, I think right over here, I decided to do 2-minute bar by bar because I was in so much profit. If I used a larger time frame, like the 5 or the 15, I would be giving back too much profit. So I ended up moving up. I think at this point right here, I decided to do 2-minute bar by bar, so I would trail it to the lows of each 2-minute candlestick. And I ended up taking profits at around $2.02, and I was fully exited out of my position at that point. Now, I'm not gonna lie, this was one of the best managing trades I ever had. I almost managed it perfectly. Maybe it was a little lucky due to the fact that I used the correct time frame for trailing out of the position, but overall, it was an amazing trade. I almost wish I was recording it live. I was streaming it on Twitch, so I couldn't record and stream for some reason. But yeah, this was amazing. It made me about $10,000, and I was fully out of the trade at around 11:18 a.m. So I got in at around 9:55 a.m. and I exited the trade at around 11:15. So I was in this trade for about an hour and 10 minutes, and it was a $10,000 trade, and that was absolutely amazing. I'm not gonna lie, after the trade, I took a break, and I was just sitting like this, laying on the couch, like couldn't even believe it. I had to go get a glass of water. I think I went outside for a second and just like went on a quick 2-minute walk to just relax myself. But yeah, this is one of the best trades of all time that I've had so far. You can notice this is almost like a picture perfect gap. And the reason I was so confident in this setup wasn't actually the setup itself. It was because of the gap, how good the gap was, the fact that it gapped all the way below all this price action we haven't seen in forever. This is the lowest it's ever been in a very long time. It gapped below all this support. It created lots of shock value. It gapped down so much that I found a setup with a tight stop. I entered the position as long and it ended up following through in my favor. Now, could this trade have failed? Yes, of course. It could have entered and it could have failed. But the reward to risk on a play like this, where I'm risking $400 and I make $10,000 on a trade, this is the pinnacle of risk management. This is how you succeed at trading. It isn't about winning every single trade. It isn't about having a good win rate. It's making sure that your winning trades are very big and your losing trades are very small. Whenever I enter a trade, I'm hopeful that the trade is going to make me a lot of money, and I'm fearful that it's going to lose me money. A lot of people, when they come into trades like this, they end up taking profits super early because they're up 3-4 Rs and they say, I hit my take profit and I'm done for the day and I'm out. But that limits you from making big gains like this. Most people are fearful when they're up in a trade, and they're hopeful when they're down on a trade. They're hopeful that the stock is going to move back up in their favor and break even, or maybe make them some money when they're down. I don't do this. I don't think you guys should do this. You want to be extremely hopeful and have conviction in the trades that you take that they're going to make you a lot of money, and be fearful that they're going to lose you money. If this trade didn't work, I would have lost about $400, but this trade worked and I made $10,000. It was risking $400 and I ended up making $10,000. Now, do I see this R to R every day? No. This is one of those occasions where things went my way and I made about, 25 to 1 reward to risk. 25 Rs I made on this trade, risked 1 R, which is insane. This was an amazing trade, all based off the gap. This is my entire strategies, all based off the gap. This is how I find my bias, and then the setup is how I control my risk management. But yeah, that's a little recap. Hope you guys enjoyed this video. Let me know in the comments if you guys enjoyed it. Let me know if you have any other questions, or if you have any suggestions on other videos you want to see from me. But yeah, that's the video, guys. Gonna start posting a lot more soon, so make sure to hit that subscribe button, turn on notifications, and message me or on Instagram if you ever have any questions. I'll help you out. But yeah, guys, that's the video, and I'll see you in the next one. Peace.